This is Jim Emter, Van Ahn Company, Alexandria, Minnesota, with their closing grain and livestock comments for June 13th, 2018. Corn market down 1 1/4 to 1 1/2. Soybeans down 15 to 18. Chicago wheat down 15 3/4 to 18 cents. Minneapolis down 7 to 8 1/4. Kansas City down 13 to 14 1/2. So I chalk it up to a bit of a victory today for the corn market. We held up rather well despite liquidation in the beans and wheat market. We continue to hang on every forecast here. A little bit of rain showing up in winter wheat country, but right now that's more of a nuisance. We'll watch the European weather conditions here quite a bit. That's got the market back and forth. But when you look at the bean liquidation here, I think a lot of anticipation now as we approach June 29th that basically traders are looking for increased acreage upwards of 90 to 91 million. Informa came out today looking for a slight increase. They're starting to approach that 89.7, 89.9 million acre planting on the soybean side of things, and they took down their corn planting a little bit. They were at 89, now at 88.7. We're kind of thinking that we come in here around this 88 area on corn here, and we're thinking beans up around that 90 million acre, and we think that's what we'll get here on June 29th. But a lot of talk about acreage all of a sudden. That's coming here in just a couple weeks, and that'll be your next big USDA report as we get our stocks number, which we look for more favorable corn usage. Part of the reason corn's holding together after the report we had. And also as you look to it, more acreage in the soybeans, so that's why we see the market setting up a little bit in that direction. Key support areas, 940 on the soybeans now. Corn market held its support, bounced off it, and we had a pretty good day, only down 1 1/4, 1 1/2. We'll see if we can't build off that resistance. Around 390 3/4 off the July. 411 on the December. That's going to be right into that gap areas. Resistance in beans is going to kind of remain overhead at $10 now as you work ahead, and the wheat markets back and forth. We'll let those disseminate a little bit, trade out, and we'll kind of set some ranges thereafter. Feeder cattle down 15 to 70, live cattle down 40 to 60. Hog market up 132 1/2 to 212 1/2. Let's start in hogs where we're accelerating to the top side. We kind of blew out of that upside resistance area of 82. We still think support's pretty tight there, but we're at least $1 above where we thought resistance would set up. So the market trying to prove a point here, and we'll see just how high we can get. Every dollar or two higher here, we're going to run into stiff resistance. So I don't look for the market to run too far, and really have stressed the importance of coming in here between 82 and 84 in marketing, and we're finished today at 83 for those summer months. So be attentive to that, look to take opportunity. Cattle market today, when you look to the undertone, just buying time, a little bit weaker undertones as we close today. Just buying time. We look for a cattle market that's found a bottom, it's got good support behind it, can cleanse here $1, $1.50 to bring those charts more in alignment, and then we look for an acceleration to the top side. Could really use some trade news, and that may be what's in the backdrop here. A big weekend of potential trade news out of China, possibly even with Mexico as we work ahead in EU. So we'll watch those details. Look for a wild finish to this week with Thursday, Friday trade exports tomorrow morning, and then next week could be even wilder with that trade news as well as weather forecast. There is some heat showing up in the extended models, but again, too far out to put a lot of confidence into it. This has been Jim Emter, Van Ahn Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation. Have a great afternoon.